Hey, everybody, welcome back to this episode of Think Business Live. Looking forward to talking to Gil Baumgarten. Gil, it's great to have you on the show. You are the president of Segment Wealth Management and the new author of Foolish, which is an Amazon bestseller. Congratulations.
Thank
How
you.
investors get worked up and worked over by the system. So I'm looking forward. I always love talking to authors on the show. It always amazes me how much knowledge can be put into a book that somebody can buy for a very little amount and gain your whole lifetime of knowledge and all the research that, I always think every book is like hundreds of years of knowledge packed in, whether it's an Audible or something you read. So welcome. So let's dive in. And before we talk about wealth management, let's talk about the book, right? So I was so intrigued when your team reached out just about the name of the book, right? Because I just kind of want to understand the origin of the word, of why the name Foolish, and how you believe people are getting worked over, and how, and what the reader is going to actually get from the book.
Well, people have really two primary problems when it comes to managing their money. And they don't understand how to properly take risk. And Wall Street, which is the traditional way that people consume wealth management services by working with a broker for any of the big brokerage firms, that's, they're out in the community and those are the relationships that get developed. But those people have conflicts of interest in the way that they make recommendations, and investors are taken advantage of in many ways, and there's many better ways to do things than the traditional brokerage methodologies. They're just not discussed because they're not lucrative for the brokerage industry. And so the lack of understanding that people have and pursuit, chasing their tail and being motivated by fear and greed are, twin problems right there. But then how they execute those strategies with traditional brokerage firms is really what drove me to write the book. And I've been doing this for 37 years, had my own firm for the last 11 years, but I spent 25 years at some of the biggest firms on Wall Street. And I got very frustrated with the way they wanted me to do things, and it wasn't the most efficient outcome. So the engineer in me did not like that.
Yeah. So let's talk about that. I think there's a lot of people that are feeling that way currently, right? We're going through something called the Great Resignation. 4 million people left their jobs in April. Many studies are pointing to people wanting to start their own business more so now than in recent years. I remember when I started my first company out of college, and then I started this company 6.5 years ago, my business coaching business. But I remember thinking, I can either stay in corporate America and conform, or start my own business, right? And
that was a spot I found myself in. And an old adage in the brokerage business is you'll stay in your current situation until the pain of staying is greater than the pain of leaving.
Right.
And I found myself in that spot. I was frustrated for the last decade that I was in the brokerage business, but I was scared to leave, and I didn't really know what re-registering would look like and getting out of the FINRA regulated part of the business. And many of your listeners may not know this, but there's two regulatory bodies that govern the advice business. The first is FINRA, in which you have to work for a brokerage firm and you have to earn a commission. And the second one is regulated by the SEC, where you cannot work for a brokerage firm and you cannot earn a commission. And those are really the two paths that people consume advice and get, and pay for it. So I wanted to be in the latter, and I was stuck in the former. So.
Yeah. And I think it's interesting too, because I work with a good amount of wealth advisors as a business coach. And I think many people are worried, if they leave, what happens to their book of business?
That's right.
And so how were you able to kind of make the leap, right? What was that first step? And whether I'm not suggesting that you're only talking to wealth managers right now, but just anybody who's looking to take that leap, and or a promotion higher up in a business, right? Anytime you move. So how did you move through that?
Couple of things. Well, one is I was very careful with my own money. in terms of maintaining my liquidity, making sure I wasn't over levered, which put me in a position to save up enough cash, one, to invest for the startup, because I would never have been able to get financing for this type of business. Most likely would not. And the other would just gave me the comfort that even if it didn't go well, that I could still afford to send my kids to school. My 3 kids were all in college at the time, but I had enough money saved up and lack of debt that really gave me the freedom to take a risky choice. And here it is 11 years later, and my business is about 7 times the size of the business that I had when I left UBS back in 2010.
Yeah.
So anyhow,
I want to talk a little bit more about that kind of rolling the dice and investing in yourself. Right. I mean,
right.
A lot of people ask me this, when is the right time to do it? When did you build your business plan? What were the steps up to making your decision when it came to that?
Yeah. So for me, one was just what I was talking about, the liquidity, but it was even more than that, where I began to see the difference between what a true advisory relationship looked like and what a brokerage product peddling type of relationship looked like. And so how could I create within the brokerage firm that I worked in an advisory relationship that would have the most commonality with a pure advisory relationship separate from a brokerage firm. And I made sure that I didn't own any proprietary product that was something issued by the firm. I didn't buy any packaged product. Was not doing anything that was non-transferable. The brokerage firms kind of maintain some control with hedge funds and structured notes and certain types of more expensive vehicles to own that they don't allow to be transferred to other firms.
Yeah.
That puts tentacles into the client's ability to move their money wherever they might want. So I was very deliberate in making sure that my clients didn't own anything like that, to make sure that the transferability of my client assets would be as easy as possible.
Yeah. All right. I love it. All right. Let's go. I want to go back to the book for a minute. And so the book, right. So that we talked about how the book was birthed. Now, what is someone going to get from the book?
Well, the first maybe third of the book is how Wall Street operates, where they make their money, the biases that they discuss with clients that in many cases are not true at all, the things that they dismiss. One of the things that I found that Wall Street dismissed that was a contra to their business model, but a huge help if it's discussed to clients, and that is taxes. Wall Street goes right into active methodologies, trading client accounts, creating taxes in their wake, as though taxes are just some byproduct that cannot be controlled. And for the ultra high net worth client, it is such a huge deal to give away the tax advantages that could have been had if you would have had a different methodology. And the brokerage firms don't want to talk about those methodologies because they lead to lower transactional activity and, of course, less commission, less revenue. So they just completely dismiss the value of it, and clients are leaving huge amounts of compounded value on the table. So that's the first third of the book, is how they make their money, where the dark corners on, the side deals they cut with other providers such as mutual funds. So it's sort of the ecosystem of the inside of the brokerage industry, which should be very eye-opening for a consumer of those services. But the back 2/3 of the book is how people are wired to think about things and the unhealthy thought processes that we try to flush out. It's almost like a psychology deep dive into why do you do what you do, and why is that normally bad for you, and what would be a different way of thinking about this so you can develop healthier thought patterns and you don't have demons on your shoulder telling you you should be buying Bitcoin or this trend or that trend, when a lot of that's just noise. So that's essentially what the book is about. It's a sort of a come to Jesus, if you will, with yourself about the baggage that you've got from all the bad habits you developed over the reasons why you've done that. So
well, I love what you're talking about, bad habits and raising awareness. As a business coach, I see it all the time. Right? Getting clients to raise their awareness, raise their consciousness. I sometimes pointing out many times, you're smarter today than you were yesterday, and you're smarter today than you were a year ago, 2 years ago, 5 years ago, 7 years ago. But I think sometimes people get stuck in the patterns from 5 years, 7 years, right? Absolutely. So it's like the knowledge I have today required different rhythms, patterns, systems, and the way I approach things, because I can actually accelerate my growth faster if I reset all of that.
Absolutely.
And so, yeah, so for, and it's interesting because, Gil, I work with CEOs, owners of companies, managers, salespeople, et cetera, but pointing that out sometimes is very kind of an aha moment for people because they are stuck in their bad habits. And so I just want to kind of dive into that a little bit more. How were you able to recognize that and get real time and rebuild the habits of today?
Well, part of it is we do business with 200 families. We have a little over $1 billion of their money, and we give them counsel on how things work. And we see the same questions come up over and over again, or the same perspectives about these various issues. And I had this head slap moment of my own, like, oh my gosh, I can't believe that people don't understand this about the way that works. And so it was making a list of all those things that I wanted to talk about, so that if the last 50 people asked me about that, there's probably thousands of people out there that have the exact same thought process.
Yeah.
And the other thing about it is that I've gone through personally as an investor many iterations of the way that I thought things would work. When I first got in the brokerage business, I thought it was all about parlay. I need to buy something and then swap it for something else and then swap that for something else. And then I noticed, one, how hard that is. And two, all the compounded value that I left on the table from another type of methodology of how I approached it. And keeping costs low and avoiding the taxes really has ripple effects that produce much better rates of return over time than any type of transactional methodology. And transactional methodologies like a hedge fund are taking, in many cases, half of the rate of return that they generate in the form of fees, and clients don't really have a very fair shake at doing well in that kind of vehicle. And we, in the book, talk about a study that was conducted that looked at the entire hedge fund industry and exposed the math of compounding and what the entire industry has produced for themselves and what they have produced for investors. And hedge funds in general are the ones who end up on the best part of the stick.
Yeah. Interesting. All right, good. Thank you for all of that. I want to rewind a little bit because I'm a big believer that success is not a straight line. Right. So here you are, you're on Wall Street, you're growing into your own business. You're not fulfilled. You're, not wanting to conform. But take me back, to the first 10, 15 years of your life and the seeds that were planted and the mentors that were and the guides that were in front of you that had an impact on what you're doing today.
Well, my first boss in the brokerage business, I went to work for E.F. Hutton in 1984.
Oh, isn't that wasn't that?
Yep, that's it. My first boss was a fellow by the name of Jim Fierno.
Yeah.
And about maybe 2 or 3 months into it, I could tell that there was different methods being employed by the brokers in my branch office. There was maybe 25 of us in there. And some of it just seemed, I don't know, like a sweatshop. People prospecting and the like, and other people had a different methodology. And I kind of went in there and told him that it didn't seem all that professional, and it seemed like we weren't really giving advice. We were just looking for trades.
Yeah.
And he basically said, this is an open platform. You can build the business the way you want to. It doesn't have to be that way. Although that was the path of least resistance, and I morphed my business very quickly into an advisory type business. But I found also quickly that the firm would even prevent me from doing certain things that would make more sense for the client. I liken it to a bowling lane with bumpers on it. They lay out a bowling lane and they put bumpers in it, and you are allowed to go down this lane, but you're not allowed to leave outside the bumpers. And outside the bumpers was really where I wanted to get. And the longer I did it, and the more I learned about how things work, the more time I wanted to spend outside the bumpers. And so ultimately my business got big enough that the financial incentives to choose to leave and do something different became too great. So
good. I love it. All right, good. You ready for a quick speed round?
You bet.
All right. Favorite book and why?
The Intelligent Investor by Ben Graham.
It's a good one.
Yeah.
Not an easy read, but a great one. Yeah.
Exactly. Not an easy read, but there's a couple of salient points in there that people need to, put deep down in their psyche.
Yeah.
So,
It's kind of up there with like Ray Dalio's principles. Like you
that's
can't read
exactly
it
right.
in one sitting. Right.
Yeah.
Yeah. Best piece of wisdom you've ever received?
My longtime friend Ross Kiger, who died in 2009, told me that knowledge comes from experience, but wisdom comes from bad experience.
Yeah, that's a good one. Yeah. Finish this sentence. One thing every person who needs to save more money can do starting today is.
They can look in the little places, such as the Starbucks that you're paying $5 a day for, or the way you waste your money on fees and expenses inside of brokerage products that don't have any odds of producing excessive return, but they have 100% odds of producing excessive costs.
Yeah. Yeah. It's amazing when you add up all the monthly costs and things, what that adds up to when you times it by 12, right? The recurring.
Back to that monthly cost. My friend Jim Fierno that I was talking about earlier said, "Hey, Gil, I don't mind you spending my money to have a seminar or look for clients or, entertain your clients or whatever, but don't you ever sign me up for something that I have to pay for monthly."
Yeah. Yeah.
Yeah.
Yeah. No, I hear you on that. Two more questions. One piece of advice you would give every aspiring entrepreneur who's not an entrepreneur yet.
Maintain your liquidity to give yourself choices in the future.
I love it. Define yourself in one word.
Tenacious.
All right. Tell people who your ideal clients are and how they can connect with you and where they can buy your book, Gil.
Our ideal client, our typical client, is going to be someone in their 60s, probably sold a business or is an entrepreneur thinking about their business. We typically deal with $5 million and higher net worths. The reality is it's really more like 10 million. And we are a low fee and low tax and super tax sensitive. That's one thing that makes us unique. We also manage client money in-house, but we don't charge a second fee for it. Most wealth managers will basically put clients in mutual funds or separate accounts so that they don't have to be responsible for it, which those firms also charge secondary fees. So we manage money for an efficiency outcome or an efficient outcome. They can buy my book Foolish on Amazon. It's also on Target's website. So Foolish with yellow with the ladder on the right-hand side of it as the picture I see. So
there you go.
That's where they can get it. And it'll be on Audible in another month.
Nice. All right, good. Gil, it's been a pleasure. I appreciate everything that you talked about, your entrepreneurial spirit, the importance of your own liquidity, the importance of things compound over time, and, writing a book that's going to help a lot of people. And so
thank you. Appreciate it.
I appreciate you being on the show. Think community, if Gil can be of any assistance, reach out. Gil, thanks very much. Thanks, everybody.
Appreciate it. Thank you. Take care.